Retiring early doesn't have to be just a dream. It can be your reality with the right strategy. Imagine having a portfolio that pays you enough to cover your expenses, letting you walk away from the 9 to 5 grind for good. Sounds too good to be true? It's not. The Schwab US Dividend Equity ETF or SCHD has become a go-to choice for investors looking to build steady, passive income. And today, we're going to check exactly how much you need to invest to make early retirement possible. In this video, we're breaking down the numbers, how much you need in SCHD to generate $3,000 or more in monthly passive income, how dividends can grow your wealth over time, and why this strategy could be your ticket to financial freedom. Let's get started. The challenge of securing reliable retirement income. There is a common problem that many investors face, which is to retire comfortably with a steady income stream. But traditional retirement accounts often fall short in providing sufficient cash flow. Relying solely on Social Security is frequently inadequate, and bonds currently offer historically low yields. John, like many of you right now, has a clear goal. He wants to build a portfolio that generates at least $3,000 in passive income every month. That's $36,000 a year. He doesn't want to stress over market fluctuations or constantly sell assets to cover his expenses. Instead, he needs an investment that grows steadily, pays reliable dividends, and doesn't require hours of research into individual stocks. What is SCHD? The Schwab US Dividend Equity ETF or SCHD is an exchange-traded fund that aims to replicate the performance of the Dow Jones US Dividend 100 Index. This index focuses on high-quality US companies renowned for consistent dividend payments and robust financial health. As of February 2025, SCHD boasts an expense ratio of just 0.06%, making it one of the most cost-effective dividend ETFs available. It manages approximately $69.2 billion in assets, providing substantial liquidity for investors. The fund comprises around 103 holdings diversified across various sectors, offering a balanced approach to dividend investing. The ETF's trailing dividend yield stands at approximately 3.5%, reflecting its focus on income generation. Notably, SCHD has demonstrated consistent dividend growth, averaging 12.2% over the past year. This growth underscores the fund's potential to enhance income streams over time, benefiting long-term investors. Why does SCHD work the best? SCHD's effectiveness as a dividend investment vehicle lies in its commitment to quality over mere yield. Instead of chasing high dividends at the expense of stability, SCHD prioritizes financially robust companies with strong earnings, reliable cash flow, and a consistent history of dividend growth. As of January 2025, its top holdings include AbbVie 4.7%, Coca-Cola 4.6%, Amgen 4.5%, and Cisco Systems 4.3%, among others. These are companies that represent industries that have weathered economic downturns while continuing to reward shareholders. Beyond individual stocks, SCHD's sector allocation plays a crucial role in its performance. Financials and healthcare each make up approximately 17% of the portfolio. Consumer staples account for 14.8%, and industrials holds a 12.5% share. Energy at 11.8% ensures exposure to companies that benefit from commodity cycles, while sectors like information technology 8.9% and communication services 4.7% add diversity without excessive volatility. This strategic allocation reduces sector-specific risks while maintaining consistent dividend income. Now, let's discuss SCHD's historical performance. While past returns don't guarantee future results, the ETF's track record remains a strong indicator of its resilience. As of February 2025, its total return over the past year has surged by 13.3%, with a 3-year annualized return of approximately 6.7%. Over a 5-year period, it has averaged 12.5% annually, while its 10-year performance stands at an impressive 11.6% per year. Since its inception in October 2011, SCHD has delivered an annualized return of 12.9%, demonstrating its ability to generate both capital appreciation and consistent income over time. What truly sets SCHD apart in retirement planning is its dividend growth. In the last year alone, dividends have increased by 12.2%. Over a 3-year period, they've grown at an annualized rate of 9% to 10%, while 5-year growth has ranged between 12% and 13.3% per year. Looking at the last decade, SCHD has maintained an 11% to 12% annual dividend growth rate. SCHD's steady dividend growth is the key to creating a reliable and increasing income stream in retirement. When John invests, he's not just locking in the current 3.5% yield. He's securing a future cash flow that has a strong track record of rising over time. Incorporating SCHD into your retirement plan. When it comes to building a solid retirement portfolio, SCHD can play a key role. The way you integrate it depends on your time horizon and financial goals. Strategy 1. The Dividend Growth Ladder. This strategy combines SCHD's dividend growth potential with higher yielding assets for immediate income. A portfolio structured with 40% in SCHD, 30% in higher yielding dividend ETFs 4 to 5% yield, 20% in fixed income, and 10% in covered call ETFs 7 to 9% yield could provide an initial 4% yield. To generate $3,000 monthly, an investor would need around $900,000. Strategy 2. The Core and Satellite Strategy. A more balanced approach would be making SCHD the foundation of your portfolio, allocating 50 to 60% to it, while supplementing with 20 to 30% in a growth-focused ETF for capital appreciation, 10 to 20% in bond ETFs for stability, and 5 to 10% in REITs for additional income diversification. With a blended yield of around 3.3%, an investor would need around approximately $1.2 million to produce $3,000 per month in income. Strategy 3. The All-In Approach. Some investors opt for a portfolio made up entirely of SCHD. This offers simplicity and a steady income stream, but diversification is usually a safer bet. Still, if someone were to go all in, they'd need roughly $1.25 million invested to generate $3,000 per month at SCHD's current 3.5% yield. Strategy 4. The Accumulation Phase Strategy. For those still saving for retirement, the approach shifts. Take John, for example. He has 15 years until retirement. His best bet is to maximize contributions to tax-advantaged accounts, set up automatic investments in SCHD, reinvest all dividends through a DRIP, dividend reinvestment plan, and gradually increase his SCHD allocation as retirement approaches. By following this strategy, he benefits from dollar cost averaging and the compounding effect of dividend reinvestment, positioning himself for strong future income growth. How much you need to invest in SCHD to retire early. Let's break down exactly how much investment in SCHD is required to generate a steady income stream and to retire early, depending on when you plan to start withdrawing. The amount needed will vary based on whether you need income immediately or have time to let compounding do its work. For those who require income right away, the calculations are straightforward. At SCHD's current 3.5% yield, generating $1,000 per month or $12,000 annually would require an investment of roughly $342,857. To push that income to $3,000 per month, about $1.03 million would need to be invested. Those looking for $5,000 per month would be looking at an investment of around $1.71 million. While these numbers might seem high, they represent immediate income generation without relying on price appreciation. However, for investors with a 10-year horizon before needing the income, reinvesting dividends changes the equation. Assuming SCHD continues its historical annual total return of approximately 10.9%, an initial $100,000 investment could grow to around $283,300 in a decade. The projected annual dividend income at that point would be about $10,915, translating to roughly $910 per month. A large starting investment, say $500,000, could compound into approximately $1.42 million over the same period, generating an estimated $4,550 in monthly income. For those with a 20-year investment horizon, the power of compounding becomes even more evident. A $100,000 initial investment could potentially grow to around $803,300, producing an estimated $3,150 in monthly income purely from dividends. Doubling the initial investment to $200,000 could lead to a portfolio worth approximately $1.61 million in 2 decades, generating around $6,300 in monthly dividends. The $1 million SCHD portfolio. Now, let's be real. Many investors wonder what a long-term SCHD strategy would look like if they started with a $1 million investment. Assuming an annual price appreciation of 3.5%, the portfolio's value would be approximately $1.035 million after the first year, generating around $35,000 in annual dividend income, or roughly $2,917 per month. Fast forward a decade, and the portfolio could grow to approximately $2.83 million, providing an estimated $109,150 in yearly dividends, which translates to about $9,096 per month. Looking at a 20-year horizon, the impact of compounding becomes even clearer. The same initial investment has the potential to reach around $8.03 million, producing an annual dividend payout of approximately $377,500, or about $31,463 per month. Stretching this to 30 years, the portfolio could grow to roughly $22.77 million, generating around $1.29 million in annual dividend income, an incredible $107,333 per month. These numbers highlight the power of long-term investing. But it's essential to remember that while SCHD has shown strong historical performance, the future is never guaranteed. Of course, not everyone has a lump sum of $1 million to invest upfront. A more realistic approach for most investors is consistent, smaller contributions over time. Consider someone like Harry, who sets aside $1,000 each month for SCHD while reinvesting all dividends. Over 10 years, this disciplined investing approach could turn $120,000 in total contributions into an estimated portfolio value of $190,000, generating $7,315 in annual dividends, or about $610 per month. Extending this strategy to 20 years, with total contributions reaching $240,000, the portfolio could grow to approximately $632,000, producing about $2,475 in monthly dividends. Over a 30-year period, the effects of steady investing and compounding become even more apparent. With $360,000 invested over time, the portfolio could reach an estimated $1.86 million, generating around $8,775 per month in passive income from dividends alone. This approach underscores how financial independence is achievable even with modest, consistent investments. By taking advantage of SCHD's dividend growth and reinvesting dividends along the way, investors can build a substantial retirement income stream without needing a massive lump sum to start. Conclusion: SCHD stands out as a solid investment choice, offering a balance of dividend growth, stability, and long-term potential. The real power of SCHD lies in its ability to compound over time, making early investing a game changer. The sooner you start, the less capital you need to reach your goals. Whether you're just beginning your investment journey or refining your retirement plan, SCHD is worth considering as a core holding for generating reliable income. Now, I'd love to hear your thoughts. Are you investing in SCHD for your retirement? What's your ideal monthly dividend income? If you found the breakdown in this video valuable, like, subscribe, and share for more investing insights.